Buying a home is probably the biggest decision that you'll make in your entire life. And making just one mistake can cost you thousands of dollars, or in some cases, even your dream home. In today's video, I'm breaking down 5 different things, 2 on the lending side, 2 on the real estate side. One kind of fits with both that you should never do when buying a house, especially in the 2024 housing market. Now, whether you're a first-time home buyer or an experienced buyer that's done this several times, these mistakes that we're going to talk about can trip up anyone. So let's dive into the video to make sure that you avoid them. Now, many of you know a lot of my videos are based on real experience with me out there in the field working with buyers, having difficult conversations, having conversations in general, and also hearing my lending partner on the phone talking to different buyers when they're calling in, asking all of these questions. On top of that, I'm fortunate to have a lot of people that comment on my videos and ask questions about different things. So what I'm talking about today are things that I'm seeing right now in the current housing market that you absolutely have to be aware of because they can end up costing you a lot of money. My name is Jeb Smith. I'm a real estate broker here in Southern California, and my channel is all about real estate and mortgage education. So if you find any value in today's content at all, do me a favor and hit that thumbs up. And if you want to stay updated on videos and content like this, do me a favor and subscribe to the channel. Fortunately, at the moment, interest rates are actually trending down. But one of the first things I want to talk about in today's video, a mistake that I see a lot of people making at the moment, is actually buying their interest rate down permanently. They're paying points upfront costs in order to buy their interest rate down. And I can see from a buyer side why it actually might make sense, because a lower interest rate means a lower monthly payment. And in some cases, you might need that lower monthly payment to actually qualify for the mortgage. But for the majority of people out there, that's not the case. The reason they're buying down the interest rate is because they're not comfortable with the monthly payment where interest rates are at the moment. But here's the problem with buying down rates in the current environment, is that there's a large upfront fee when buying down an interest rate. Typically, you pay 1% of the loan amount to get a 0.25% buy down on that rate. So say, for example, interest rates today are at 6.25%, and let's say you have an $800,000 mortgage. That means you're going to pay $8,000 to buy that interest rate down to 6%. So in this example, you just paid $8,000 to save $128 a month, which also means that it's going to take you about 62 months, just over 5 years, to recoup that cost. And the reason I say that it's a mistake in doing that is because interest rates are trending lower, and the likelihood of interest rates going lower into the low 5% range, maybe even the high 4% range over the next couple of years is really, really high. And the reason you're likely to see that is because the economy is slowing. The Fed is going to start to lower the Fed funds rate, which in turn is going to improve that spread between the 10-year and the 30-year fixed. And as that happens and the 10-year moves lower, interest rates are going to improve. So the last thing you want to do as a buyer right now is throw a bunch of money, sunk cost, into a loan where you could actually take advantage of that same interest rate and maybe in a couple of months, or in some cases, maybe even the next couple of years. In the example that we just did, it's a 5-year recoupment period. So if you can refinance to that same rate within the next 5 years, you've essentially thrown good money after bad money in order to try to chase that interest rate. So before you buy down interest rates, just make sure you're doing the math carefully and you completely understand your break-even point. If you're someone who thinks interest rates are going to continue to go lower, then you absolutely shouldn't be paying money in order to get that rate. Now, if you're on the flip side and you're thinking interest rates are going higher and you're looking to lock in the lowest possible rate that you can, then by all means go for it. But I'm on the flip side. I think interest rates are headed lower, so I think paying money to buy down an interest rate is a bad idea. But with that said, I'd love to know your thoughts. Do you think interest rates are headed lower, or do you think they're headed higher? Do me a favor and let me know in the comments below. Now, one last thing I do want to touch on when it comes to buying down interest rates, and that's if you're in a position where your job's about to change or you're getting ready to retire and you're no longer going to be able to qualify for that loan in the future, then maybe paying money to buy down the interest rate right now is a good idea based on your circumstance. If you're not in a position to potentially refinance in the future, then it could be a good idea to take care of it now, but just have that conversation with your mortgage professional. Now, the next thing I want to talk about is also on the mortgage side, and that is where buyers out there are waiting until the very last minute to shop for loans. I can't tell you how many times I overhear my lending partner on the phone talking to a buyer who called him. They either found us online, they watched the podcast, they watch my videos, whatever it is, and they call at the last minute and say, hey, I'm getting quoted this interest rate. Is this a good idea? Because one of the things our team will do is actually review a loan estimate to tell you whether or not you're getting a good deal based on the current market. And oftentimes the answer is yes, you're getting a good deal. There's nothing to worry about here. Just, do your thing. Whereas other times maybe we can save a quarter, 3/8% on that mortgage where you're not having to pay any cost at all. And the problem is a lot of buyers are doing it at the last minute when they've got a week, 2 weeks to close on that loan, and it makes switching to another lender really, really difficult. Now, in many cases, my team can still get that loan done, but what we often find is the buyer just proceeds to move forward with the first lender because they don't want to ruffle any feathers, because they don't want to have that difficult conversation, or they don't want to go back and ask for additional time. And the reality is all of this could have been avoided had they actually just done a little bit more research to start with, shopping a few lenders, comparing fees, comparing rates, mainly looking at box A on the loan estimate to see what you're being charged. So the mistake is waiting until the very end to try to shop around versus doing it prior to getting your offer accepted. Now, if you are one of those people that plan on shopping around, just make sure you're doing it in the same day, around the same time, and you're not talking to 20 different lenders. You're talking to maybe 2, maybe 3 at the most. The more lenders you talk to, the more confused you're going to get, and the more difficult it's going to be for you to make a logical decision. So in short, do some shopping around, talk to a bank, talk to a broker, talk to maybe a credit union. And when you're doing that, just make sure you're doing it early in the process. Now, if you're watching this and you'd like a link to get in touch with us, or you'd like our team to compare interest rates against something else that you're getting quoted, do me a favor and check that link in the description of this video. Now, the next thing I want to talk about is something that's recently changed out there in the industry, and that is buyer agent compensation, how your buyer's agent is actually getting paid. Now, I've done videos where I've broke this down and talked about it in detail, but there's a lot of confusion out there on the home buyer side about how to actually get this money paid. So I want to spend a minute here and actually talk about mistakes around buyer's agent compensation. Just understand it's negotiable. So if you're asking the seller to pay your buyer's agent compensation when you're writing it into your offer and the agent comes back and says no, or they counter offer that out, that doesn't mean you can't counter offer and ask for it again. It doesn't mean that you can't ask for part of it and then you decide to pay the other part. It also doesn't mean that you can't change your offer. So say, for example, you are making an offer at $500,000 and you've agreed to pay your buyer's agent $15,000, and in your original offer you just wrote the offer at $500,000 but asked the seller to pay your agent's compensation and they said no. Well, that doesn't mean you can't go back and again ask them to pay it again, pay part of it, or in some cases raise that offer to $515,000, where the seller is actually giving you that $15,000 in concessions to pay your agent. And what I'm seeing is agents out there just accepting whatever the seller says without trying to negotiate, without trying to counter it. And the same can also be said on the buyer's agent compensation side. Yes, you've agreed to a certain percentage with your agent before ever seeing that house. That's part of the new agreement. But here's the thing, if the seller's not willing to pay it, or they're only willing to pay part of it, that doesn't mean as a buyer you can't go back to your agent and try to renegotiate. In fact, you should. And I'm probably going to get a lot of hate out there from real estate agents, even though I am one, where I'm telling you to go out and renegotiate their commission. Now, that doesn't mean your agent's going to agree to it. Us as agents, we do a lot behind the scenes that you never ever see, but that doesn't mean you shouldn't try, because guess what? You will never get what you don't ask for. So if you're not willing to ask, guess what? You're not going to get it. So the worst thing that can happen is they both say no in that renegotiation. But on the flip side, if they say yes, then ultimately you're saving money. So don't make the mistake of not asking when you're ultimately not getting the desired result that you wanted from the start. Now, this next mistake is something I experience quite often when working with buyers and making offers on property, and that's not willing to accept when a seller says that they're selling the property as is. Understand, when you buy a property, you're buying it in the present condition. Now, when a seller does a counteroffer, sometimes they want to make it transparent. They want to make it clear that they're not willing to do any repairs. They're not willing to do anything to that property. So they reply back in the counteroffer that the property is being sold as is. And a lot of times that scares buyers away, because buyers say, well, what if something comes up in the home inspection and I want it fixed? This seller's telling me it's as is. I know there's things there that need to be addressed, so I'm not willing to move forward on that deal. Well, I think that's a mistake, because I can't tell you how often as an agent that we get one of those accepted. My buyer, decides to move forward with it based on my suggestion, and we get in there, we find issues with that property, And then we go back and we ask for those repairs to be made. We ask for credits to be given to us in order to address those repairs, even when they said it was as is. So by not accepting that property as is because you're worried that they won't negotiate, you could be walking away from your dream home in some cases. Now, in some cases, maybe that seller won't renegotiate. Well, as a buyer, you have an opportunity to walk away. Now, I realize there's cost involved. Maybe you've done a home inspection, maybe you've paid for an appraisal, and you don't want to have to pay for that cost again. I completely understand that. But what I will tell you in experience is more often than not, sellers will address things that need to be addressed that are likely going to pop up in the next inspection or are likely going to have to be disclosed in the next inspection if they have to move along to another buyer. So once you're in contract, you have a little bit of leverage in many cases in order to get some things done. So don't walk away from a transaction just because they say it's as is. Instead, continue to move forward. Do your repairs, and if there's things in there you want to be addressed, ask for them, because I will tell you more often than not that seller is willing to work with you. Now, the last thing I want to address in today's video is something that kind of falls on both sides. It's a lending problem, it's a buying a home problem. It happens both on the real estate and the mortgage side, and that is waiting for a better time to buy a home. Understand, timing the market is impossible, and waiting for the perfect moment might cause you to miss out on opportunities. Understand, the housing market is changing, shifting every single day. And that's because interest rates, home prices, inventory are always moving. They're always in flux. And so by waiting, that might mean higher prices. It might mean higher mortgage rates. And it could mean more competition. You've probably heard me tell this story in other videos, but I have clients from 2019 that sold their property because they thought the market had peaked at that time. And we tried to talk about why the market probably hadn't peaked and so on and so forth, but they decided to sell that home anyway. Well, guess what? They're still looking to buy today. They got entirely priced out of the market between 2020 and 2022 because of how quickly home prices moved up. And they were always waiting on that perfect opportunity. In fact, I've got several clients that never bought homes over the years because they were always trying to time the market. So my advice to anyone watching a video like this is buy when it's the right time in your life. Just make sure you're comfortable with the payment. You don't have to like it, but be comfortable with it. Understand that if something changes in the market, that you can continue to make that payment regardless of what happens. Make sure you have money in the bank outside of your down payment, outside of your closing costs, just in case something breaks with the house, just in case maybe you lose your job. You got an emergency fund on the side in order to continue to make those payments. And the last thing is just make sure you have a longer term time horizon. Don't be buying for the next 1 to 2 years. Buy for the next 7 to 10 years. Buy a property that can fit your needs or something that you would like to keep if you're able to upgrade to another property. That way you don't have to worry about transaction costs with selling it or any of that stuff. Buy real estate you can hold long term. So hopefully you found some value in today's video. Do me a favor and comment below with what you think the biggest mistake that I mentioned today is, and I'll do an entire video going in more detail to help you as a home buyer.